Between 2024 and 2026, global container rates tripled, EU pipeline gas imports fell by 40%, and China restricted the export of gallium and germanium. These indicators represent a structural reconfiguration of the world system toward fragmentation. Legacy risk models often fail to capture this shift because they treat geopolitics, supply chains, and financial markets as separate, isolated disciplines, analyzed by different departments. Structural intelligence provides a different reading. It recognizes that a physical shipping route, a power grid, and a trading book are the same mathematical object, a weighted network of flows. Because these layers are coupled, geopolitical, supply chain, and market stress become one measurable phenomenon, a departure from structural balance. The atlas of the world system serves as the diagnostic engine for this manifold, processing over 1,000 parallel global assessments updated every 15 minutes. Understanding these connections is required to navigate the coming shock cascade. Relying on siloed models leaves an organization blind to systemic ruptures until the damage has already localized. Systemic failures leave observable mathematical fingerprints. By identifying these signatures early, we can track how a system leaves structural balance before a collapse occurs. This network model shows a Fiedler collapse. This occurs when a diverse network loses its algebraic connectivity and begins moving as a single, unstable mode. In financial markets, this is the signature of a crash. Diversification fails as all asset correlations rush toward one, collapsing the entire market onto a single downward eigenvector. This math represents the fire sale mechanism. When one institution liquidates into finite depth, it depresses prices for all holders, forcing a synchronized deleveraging that breaches traditional safe havens. We also monitor spectral concentration. This signature appears when a single node, like one company or one country, comes to explain nearly all the variance in a global market or supply stage. Tracking these signatures across 12 interlocking layers moves a strategy from passive mitigation to predictive dominance. The Atlas methodology employs a 6-step framework to identify and exploit the world system's vulnerabilities. Iteration 1 performs an exhaustive mapping of every node, edge, and dependency in a commodity or company's end-to-end supply chain. Iteration 2 identifies the true choke points and single points of failure within that newly mapped architecture. This rare earth flow map reveals the bottleneck. Mining occurs globally, but 91% of refining routes through China, creating massive concentration risk. This is hidden by broken provenance. Materials laundered through third-country conduits pass local audits, yet the chain remains a single origin dependency. We see the same spectral concentration in semiconductors, the absolute fulcrum of modern economic and military power. Advanced logic chip fabrication rests almost entirely on a single node. Over 90% of sub-5 nanometer production is concentrated on one island, creating a physical bottleneck that would take a decade to replicate elsewhere. Isolating these choke points gives an advantage over competitors who only monitor the surface of supplier lists. In Iteration 3, identified choke points are subjected to a 10-dimensional SWOT analysis. We assess dimensions standard models miss, including specific measures for vulnerability, long-term economic viability, and structural resilience. This method defines the Taiwan Strait as a double choke point. It is simultaneously a primary container shipping artery and the world's exclusive source for advanced logic semiconductors. If this node fails, the physical maritime blockage would trigger an immediate and total decoupling of the global technology supply chain. The methodology treats geographical constraints and technological monopolies as a single, interconnected risk. Iteration 4 converts static supply data into a living graph. Modeling the global economy as a biological organism monitors the real-time health of material flows. In Iteration 5, we actualize variations of extreme stress tests against this living graph to map the consequences of systemic failure. This simulation tracks the Strait of Hormuz closure. Deleting this primary edge forces oil onto a lower-capacity Cape of Good Hope bypass, adding 14 days. This triggers a Lyapunov runaway scenario. Physical stress cascades into a permanent geopolitical risk premium, feeding inflation and destabilizing debt. These simulations update every 15 minutes, adapting to gray zone military escalations and shifting climate constraints. Continuous stress testing allows for pre-calculating a rupture's blast radius months before traditional analysts react. Through millions of simulations, we isolate structural invariants. foundational truths that survive every crisis scenario. The first invariant is the exponential growth in global AI compute demand and its direct strain on baseload energy infrastructure. The second is the irreversible energy transition. Because a new mine averages over 16 years from discovery to production, the supply of metals required to fuel this transition remains in a structural deficit through the 2030s. The convergence of compute demand and the energy transition creates a long-term, price-inelastic demand for copper and uranium. We also track the invariant of global rearmament. Capital is shifting toward defense indigenization, software-defined integration, and autonomous systems. In terms of geography, India serves as the pivotal manufacturing hub, capturing the largest share of supply chain relocations as global manufacturing decentralizes. Demographic collapse in legacy powers mathematically supports this shift, making the rise of the Global South a structural certainty. These invariants provide the mathematical basis for capital allocation across the next decade. Iteration 6 generates actionable wealth creation insights based on the real-time shifts in the living graph. This data informs an all-weather posture. In a fragmented network, this strategy prioritizes structural redundancy and convexity over legacy models of cost minimization. This involves holding non-counterparty reserve assets. As the dollar network fragments and fiscal instability rises, gold and real assets serve as a hedge against systemic exclusion. The strategic allocation focuses on the identified invariants, overweighting defense, AI infrastructure, and physical resources. Succeeding in a multipolar reality requires accepting the costs of strategic agility and just-in-case redundancy. The Atlas methodology maps global movements to provide a specific path for engineering wealth and operational dominance in a multipolar system.